Karen, a lot of people trying to figure out, we've got the Fed speaking this week, some concerning things that we could be hearing from them. But do you think we've seen the market lows for this year?
I am hoping so. That will give us a lot of confidence that even if we go back, take a few steps back, but we don't reach those June lows, then I'll be more confident going into the end of the year. So I think we have things. I know that economically things are slowing down. We know that. We know that the Fed is going to continue to raise interest rates. That calling a pivot is way too premature, and we're going to continue to see interest rate hikes. But overall, the July earnings season give investors some confidence and show that even though things are slowing down, things aren't really that bad. So if we can see some more rate increases, see peak inflation, see some good inflation numbers without the employment numbers really falling apart, then I think that will give investors even more confidence. So I don't think we're out of the woods in terms of volatility. I think September, we're getting that fall seasonality, and September is usually the coolest month, and October is no princess. But if we could get earnings, if we can get through the next rate hike, and then we see some good news in earnings, then I think we did probably see the lows in mid-June.
I hear what you're saying just in terms of things slowing down, but we know that. But that doesn't stop some pretty harsh reactions when a company gives any sort of a profit warning or sales warning. We saw this with Salesforce last night. That stock getting hit really hard. We saw that with a lot of the retailers. If you think back to Macy's or Nordstrom or anybody else this week, even when they're talking about a relatively more modest outlook in terms of sales or something, they get punished pretty hard. Salesforce, big company, it's down 6.5%.
Right, and they are, because there is that nervousness. We haven't been in this kind of environment. We haven't had a CPI read over 2.5% in 25 years. So we don't know how long and how hard the Fed is going to have to move in order to get inflation under control. And so that it's really an unknown journey. So investors are going to be extremely sensitive to any kind of negative guidance or any negative reports, because we're just in that world of unknown for now. So I think we have to expect increased volatility. And I think that, if we do get inflation under control, and we seem like we are at peak inflation, but that's not to say that we're not going to still see inflation. And so that's another thing that's worrying investors, is like, can companies continue to maintain their profit margins in this kind of high inflation environment? So there are a lot of worries out there. So we are definitely going to see investors punishing companies more for negative guidance, and maybe not rewarding companies as much as they should either on the other side, just because there is that such nervousness about the volatility in this path of the unknown with interest rate hikes.
Shepard Smith here. Thanks for watching CNBC on YouTube.